The price of gold has surged to unprecedented levels in 2025. Investors are rushing to buy gold. They are seeking safety and stability in an uncertain world. This is not a mere market fluctuation. It's a clear signal of a shifting economic landscape, one where traditional investments are faltering. This gold rush is driven by a confluence of factors. Inflation continues to erode purchasing power, geopolitical tensions are rising, the global economy teeters on the brink of recession. In these turbulent times, gold stands as a beacon of stability. For centuries, gold has been a safe haven asset. It maintains its value even when other assets decline. Today, that inherent value is more apparent than ever. The writing is on the wall. Smart investors are diversifying their portfolios. They are adding gold as a hedge against looming economic storms. The current surge in gold prices is more than just a blip on the radar. It is a wake-up call. It's time to pay attention to the canary in the coal mine. Ignoring the signals could have dire consequences for your financial future. Inflation is a silent thief. It erodes the value of your savings over time. The current inflationary environment is particularly concerning. Central banks around the world are printing money at an alarming rate. This reckless monetary policy is devaluing fiat currencies. It is making it harder for people to afford basic necessities. Gold, however, has intrinsic value. It is a tangible asset with a long history as a store of wealth. Unlike paper currencies, gold cannot be printed into oblivion. This makes it an ideal hedge against inflation. When the purchasing power of fiat currencies declines, gold tends to rise in value. This inverse relationship is evident in today's market. As inflation soars, gold prices are skyrocketing. Investors are turning to gold as a way to protect their wealth from being eroded. This trend is likely to continue as long as inflationary pressures persist. The current economic climate demands a proactive approach. Don't let inflation erode your hard-earned savings. Consider adding gold to your portfolio. It's a proven strategy to preserve your purchasing power. It will help you weather the storm of economic uncertainty. The world is a volatile place. Geopolitical tensions, economic crises, and social unrest are becoming increasingly common. These uncertainties create fear and anxiety among investors. It drives them to seek safe haven assets that can hold their value during periods of turmoil. Gold has long been recognized as the ultimate safe haven asset. Its price tends to rise during times of crisis. This is because investors perceive gold as a store of value that transcends political and economic borders. Today we are witnessing a resurgence of this trend. The war in Ukraine, rising tensions between the US and China, and the ongoing global energy crisis. These have all contributed to a surge in demand for gold. Investors are flocking to gold's safety and stability amidst the storm. The current geopolitical landscape is unlikely to calm down anytime soon. This makes gold an even more compelling investment. As a safe haven asset, gold provides a hedge against uncertainty. It offers peace of mind in an increasingly unpredictable world. The US dollar has long been the world's reserve currency. However, its dominance is waning. The reckless fiscal policies of recent years have undermined confidence in the dollar. The US national debt has ballooned to unsustainable levels. This has led to a decline in the dollar's value. Gold, on the other hand, is a non-debt-based asset. Its value is not tied to any particular currency or government. This makes it an attractive alternative for investors looking to diversify away from the dollar. The inverse relationship between the dollar and gold is well documented. As the dollar weakens, gold tends to strengthen. This dynamic is playing out in real time. The recent surge in gold prices has coincided with a decline in the dollar's value. This trend is expected to continue as long as doubts linger about the dollar's long-term stability. The decline of the dollar is a significant development in the global financial system. It underscores the importance of diversifying your portfolio. Don't put all your eggs in one basket. Consider adding gold as a hedge against the dollar's decline. Section 5. Central banks speak. A vote of confidence in gold. Central banks around the world are accumulating gold at an unprecedented rate. This trend is a clear indication of their lack of confidence in fiat currencies. They are seeking to diversify their reserves and protect themselves against inflation. China and Russia have been particularly aggressive in their gold purchases. They see gold as a strategic asset that will bolster their economic and geopolitical standing. These central bank purchases are a major factor driving the current gold bull market. They are a clear vote of confidence in gold's enduring value. This trend is not limited to emerging markets. Even Western central banks like the Federal Reserve are increasing their gold holdings. This signals a shift in sentiment towards gold. It is no longer seen as a relic of the past. It is being recognized as a valuable asset in today's uncertain world. Central banks are sophisticated investors. They have access to the best financial minds and information. Their actions speak volumes. When they buy gold, it's time to pay attention. Section 6. Institutional appetite, riding the gold wave. It's not just central banks that are buying gold. Institutional investors such as hedge funds, pension funds, and endowments are also increasing their allocations to gold. They see gold as a way to enhance returns, reduce portfolio volatility, and hedge against inflation. The influx of institutional capital into the gold market is a significant development. It is a sign that gold is becoming increasingly mainstream. It is no longer a niche investment for gold bugs and doomsday preppers. It is now a core holding for some of the world's savviest investors. This institutional demand is providing further support for gold prices. As more institutions add gold to their portfolios, demand is likely to continue outstripping supply. This bodes well for the long-term price appreciation of gold. The smart money is moving into gold. Don't get left behind. Consider following the lead of these institutional investors and add gold to your portfolio. Section 7. Recession looms. Gold's historical resilience. The global economy is slowing. Many economists believe a recession is imminent. Historically, gold has performed well during recessions. This is because gold is seen as a safe haven asset that holds its value when other assets decline. During a recession, stock markets tend to fall, real estate prices stagnate, and bond yields decline. Gold, however, often bucks this trend. It provides investors with a store of value that can help them preserve their wealth during tough economic times. The current economic indicators suggest that a recession is a real possibility. This makes gold an even more compelling investment. By adding gold to your portfolio, you can position yourself to weather the storm and come out ahead. Don't wait for the recession to hit before considering gold. By then it may be too late. The time to act is now. Section 8. Secure your future, investing in gold. In these uncertain times, protecting your wealth is more important than ever. Gold offers a unique combination of benefits that make it an essential part of any well-diversified portfolio. It is a tangible asset with intrinsic value, a proven hedge against inflation, and a safe haven during times of crisis. The current economic and geopolitical landscape is fraught with risk. Ignoring these risks is a recipe for disaster. By adding gold to your portfolio, you can mitigate these risks and secure your financial future. There are many ways to invest in gold. You can buy physical gold, such as coins or bars. You can invest in gold ETFs or mutual funds. You can even buy stock in gold mining companies. No matter how you choose to invest, the most important thing is to do your research and make informed decisions. Consult with a financial advisor to determine the right allocation of gold for your individual needs and circumstances. Don't delay. The time to invest in gold is now.